All right, welcome everybody to this brief market analysis. We are going to be very snappy with this, so I don't take too much of your time, as the market has been in some sort of sideways behavior. All right, first let's look into the Forex Factory economical calendar to see the high impact news announcement scheduled for this for tomorrow. Sorry, that's Wednesday trading day. We have just one high impact news announcement, the manufacturing PMI coming from the American dollar axis, so not much happening fundamentally for tomorrow. Now, looking into the charts, the first pair is the New Zealand dollar against the American dollar. As you can see here in the 4 hours time frame, price is reacting off the daily level of support. And as we probably know, the American dollar has been in very bad condition. It has been in very terrible state. So we need to keep taking advantage of that American dollar weakness. So in the 4 hours time frame here, we can mark this area as resistance, even though it looks like a leaning level. All right. Leaning level right there. Well, in fact, I should be keeping this one. Seems to be an expanding triangle. Okay, an expanding triangle, possibly so. All right, so as you can see, at any rate, the American dollar, the New Zealand dollar against the American dollar is trading around support zone, and so should be pushing to the upside. But as it's a terrible market situation, like I said. If you were firing the daily box indicator, you will see that price for some days has just been sideways. All right, no clear directional hint, and so this is extremely difficult to trade when you don't know price direction. Looking at this type of price pattern, which is a sign of market confusion, okay, price should begin to push to the upside again. This is not the type of trade we want to take, but aggressive traders could look to go long, well, target the upper boundary, but this is not something we will send out as a signal. The American dollar against the Japanese yen. Well, you can see the spike to the upside, and from there on, price is beginning to find some exhaustion and likely going to crash back down. We're following this in the daily time frame. We actually got the reversal. You can see that reversal here, but market volume is just too thin, and you can see that even if we are taking the entry, it wouldn't have been triggered. The market volume is just too thin, and so we are sat out of the market. This pair is still looking bearish. Well, we may just want to take even if we are looking to trade here, we'll let you know. Maybe just look for some entry with our stop loss somewhere around that area. So maybe the entry right there, first profit target right here. So TP1, entry around here. Okay, stop loss somewhere in there. Okay, well, at any rate, we'll let you know. Again, our directional bias is to the downside. Our price may turn to the downside. As you can see here in the 1 hour time frame, for the last 2 days, price has been sideways, so it's a bit difficult to trade. I'll just keep this level. Okay, take out this one, then also keep this one here. So a bit of a hard time. Now the next one is Australian dollar against the American dollar. Again, the American dollar is weak. It's really bad for the American dollar this time. This pair again should be looking to the upside. Again, those who like expanding triangle, you may want to draw one. Yeah, okay, and maybe another one here. Expanding triangles, they are common with this type of markets. Market confusion. You should expect price to again be pushing to the upside. So, but we will not trade this. Okay, we will not trade here. It's a sign of market confusion. It's not a reliable pattern. Anything can happen. Okay. All right. New Zealand dollar against Swiss franc. Just look at the market scenario. Sideways. All right. But this pair is actually bearish, and it is important to keep searching for short opportunities. We have this trend line, which is a nice one. Okay, it's a nice trend line there. And again, we may have the 3SM indicator. Let's see this. Okay, you can see that this is it looks like we are having something interesting here. All right, now we have a range. Okay, this is first swing, touching the dynamic area of support and resistance down, then this is a breakout setup. Okay, so eventually it seems we are having what do we have here? The breakout pullback, possibly for a continuation move. We are bearish here, and we'll keep searching for short opportunities only. Okay. All right, next one is Australian dollar against the New Zealand dollar in the Forex time frame, where we shared this chart with you, but I just want to emphasize why we didn't take the trade. It has been trending to the upside. You can see the trend, and again bang to the upside. We were following this, waiting for the breakout pullback, then the push to the upside, but it was quite an ugly price behavior. You can see the in the trigger chart, which is the 1 hour time frame. That's the retracement trend line. We actually got the breakouts, right? That's the pullback. Then price failed to keep pushing to the upside. It came back down. Maybe would have triggered the stop loss around India, would have cancelled the order. All right. So this ugly pullback kept us out of the market completely. Okay, so it's an unstable market scenario, even though we know the direction, but price action is just too not nice for us to get some entries. All right, the New Zealand dollar against Japanese yen. We took this trade since last week in the weekly time frame, and obviously we were trading this pin bar. For those of you who were following, you can see that pin bar here around that level of resistance. Since then, for the past 4 weeks, you can see the type of candles that we have been getting around here. This is enough sign to show us that market volume is quite thin, and so our decision is to close the trade out completely for this week. We are still getting some green lights that price may be turning to the downside, but then facing this problematic level. This is the problematic level here in the daily time frame. So if price is able to break below that level, we will see more possible more downside. And so we are just giving this trade maybe a little breathing room to see what's going to happen. Again, we are from price action, we can see that there's likely going to be a trend line around that area. So price might just be trading around currently around resistance. So let's just it is not a confirmed trend line, but we can just keep that for anticipating that price will keep respecting that level. Okay, this is the focal point of the bounce. Then you can see some hesitation around that area, so this might just be an optimal area to look for short entries if the trend is to resume to the downside. All right, if the trend is to resume to the downside again, you can see some form of retracement channel. All right, some form of retracement channel around in here. You can see that zigzag in here. Then it's like we got a breakout. Let me just zoom in and draw that level. Sorry, I'm taking your time. Okay, draw that level right here. I'm going to change the color of that line and keep it within the hourly. Okay, now to the upside. All right, again, once you have seen that, chances are that the 3SM indicator might be finding some early trend. Okay, right there you can see price actually went all the way into the dynamic area of resistance. In this case, it is a new formation, it is a fresh trend, but hey, even though we are trading this from the very long term, this is the first bounce of the dynamic area of resistance. We are not supposed to be trading this, but since the trade is based on the weekly time frame, and we are seeing this, well, we could get a little green light to keep the trade for a possible fall to the downside. Again, if you zoom in, you will see that we got that ugly tiny breakout, no momentum. The last candle is more of a pullback, then we expect to see price drop back down. So let's just give this trade a little room, be patient. Hopefully we will see price move in our direction. All right, finally, the euro against the American dollar. Well, this pair is still bullish and price is likely going to keep pushing to the upside. Like I said, the American dollar is quite weak. This little retracement here should have price again pushing to the upside. This is not the time to go short. Avoid hitting on your sell button. Okay, thanks for watching. If you have questions or contributions, feel free to send them across and we'll be very happy to respond to them. Bear in mind, we have not been trading. The market condition is not suitable. Once things are normalized, we will definitely get more entries. Thanks and do have a nice time. Bye-bye.